a very warm welcome and happy Diwali to all of you. Welcome to our Diwali special, the ultimate snakes and ladders. I'm Ankita Saxena.
And I'm Kanishka Sarkar, and in this very special edit, we will take you through all the snake bites, aka market dampeners,
and the ladders, aka the market movers in 2025.
Absolutely. But before that, wishing our viewers a very, very happy Diwali. Ankita, let's begin with the most dominant news cycle this year.
Absolutely, Kanishka. I mean, it has to be the return of Donald Trump in the White House, and that has single-handedly affected just about every business and consumer in the world. But interestingly, though, the US markets have been rather hitting record highs, Kanishka.
Absolutely. But that by no means, means that there's no market fear. We will delve deeper into that in this show. In fact, governments across the globe are still grappling with the complexities of the trade war, with the White House throwing a spanner in works each day. India has been slapped with an additional 50% tariff on account of buying cheaper Russian oil. Now, there is hope that the two countries can still strike a deal before the year ends.
Yes, absolutely. Here's hoping for that.
We didn't want to bring, it's very windy out here, we didn't want to bring out the big charts because it had no chance of standing. European Union, they're very tough, very, very tough traders. You think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China charged. We took in hundreds of billions of dollars from China in tariffs, and they understood, honestly. President Xi understood. He said, look, I understand, and the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. United Kingdom, 10%, and we'll go 10%, so we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. We're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%. Thanks a lot. He's doing a very good job. How's he doing, all right?
We are not the biggest purchasers of Russian oil. That is China. We are not the biggest purchasers of Russian LNG. I'm not sure, but I think that is the European Union. We are not the country which has the biggest trade surge with Russia after 2022. I think there are some countries to the south. We are a country where actually the Americans said for the last few years that we should do everything to stabilize the world energy markets, including buying oil from Russia. Incidentally, we also buy oil from America, and that amount has been increasing. So, quite honestly, we are very perplexed at the logic of the argument that you had referred to.
Well, coming back to the markets then, as I was saying, Wall Street has been doing exceptionally well. In fact, Wall Street has given some very impressive returns, with Nasdaq and S&P 500 giving double-digit returns. However, there's now a universal consensus that AI bubble is building up and a lot of investors could perhaps lose their money. But that only the time will tell. But as far as the global markets are concerned, look at Kospi, that is up a staggering 40%. DAX and Nikkei both recorded gains of almost 26% each.
Absolutely. In fact, even the FTSE has returned 15% in gains, and that's where the story becomes a little disappointing for Indian investors, with Nifty barely moving the needle since the last Samvat.
If you look at 1 year, you feel you missed out. You're missing out a very, very big global market, a global rally across asset classes. But when you look at 4 years, 5 years, you realize that, well, it's a time correction. That's good. It's not a price correction, not a massive price correction. Yeah. And hopefully that we are actually consolidating before the next leg up. So in that sense, that may also be looking pretty, but maybe not at the moment, maybe a few months down the line.
Also, FIIs have been keeping an arm's length from the Indian markets, chasing returns across the globe. But there's a silent financial revolution that's brewing in the country, with domestic investors resolutely investing in India's growth story.
Absolutely, Kanishka. And if you look at the SIP numbers, I mean, the SIP contributions rose to an all-time high of 29,361 crore rupees in September, helping cushion the impact of the $2.7 billion sell-off by FIIs amid the global trade concerns. In fact, the equity mutual funds also have seen contributions continuously month over month, the monthly inflows since February 2021.
Sometime this quarter, we should be able to get to some kind of a deal. Yeah. I'm quite hopeful and confident. I think recently there has been a little bit of thawing of, the relationship. We're again seeing our trade, team going back to the US. I don't think, any other trade deal has gone so much of back and forth, but hopefully the patience will pay off. I think markets, just from a sentiment perspective, I think, markets are waiting for something like that to happen. And if it were to happen, I think it'll be a big boost, sentiment booster, for the markets as well. Perhaps that could be the trigger for finally a breakout of this very tight range that we've been in for almost a year now. Yeah.
And well, as we stated earlier in the show, there is a reasonable amount of fear in the global markets, Kanishka. Absolutely. Despite the impressive returns that we have been seeing across the globe. What else explains the stellar rise of gold and silver? Now, I have to say, Kanishka, that all that is shining this year at least is gold.
Absolutely.
I mean, just look at the gold prices that have touched $4,200 an ounce, with a return of almost 60% this year. And the surge has been fueled by strong investment demand from the geopolitical tensions, the dollar weakness, the US Fed rate cut expectations, and equity and bond market risks. That are the major factors contributing to the gold's rally, according to the World Gold Council.
Absolutely, Ankita. And you know what more? Bank of America has raised its target for gold to $5,000 an ounce in 2026. In fact, Goldman Sachs, that also sees gold hitting the 5,000 mark very soon.
Well, yes, all that is glittering this Samvat is gold. In fact, it's not just gold. Silver too is shining bright, not only in the global market, but in the domestic market as well. And look at the kind of returns these precious metals have given over the last 1 year. Gold is up a whopping 55% on a year-to-date basis so far. Silver is up a whopping 70%. That's the kind of move that we have seen as far as these precious metals is concerned. In fact, if we look at the yearly move, remember in calendar year 2025 so far, gold is up nearly 50 to 55 odd percent. This is followed by a solid 22% uptick that we had seen in calendar year 2024 and about 13% uptick that we had seen in calendar year 2023. Now, several factors are aiding the move as far as the yellow metal is concerned. Geopolitical tensions which continue to escalate, safe haven demand that continues to increase in the global market. Central banks globally are buying gold. So these are some of the triggers which are aiding the up move as far as gold is concerned. But as I mentioned, it's not just gold. Silver too is shining bright. In fact, it has now crossed that $50 per ounce mark in the global market. And the up move in silver this year so far is followed by nearly 22% up move that we had seen in calendar year 2024. So that's the kind of returns both gold and silver have given. And for silver in particular, it is because of the supply crunch that we are seeing not only in the domestic market back home in India, but on London Metal Exchange as well. But brokerage houses, despite the up move, continue to remain very positive. In fact, it's a divided view. Some brokerage houses are cautious as well as far as the outlook is concerned. But yes, this somewhat one asset class that is shining bright clearly is the precious metals basket.
But well, if you thought that it is just gold that was the only certain way of making money, then think again, because India has in a way become the IPO factory of the world with more than 6 dozen main board IPOs this year alone hitting the bourses. I mean, India is now only behind US, China and Hong Kong in terms of funds raised through IPOs, and that is despite the FIIs pulling out almost $18 billion just in this year, Kanishka.
Absolutely.
Well, yes, India can rightly be called the IPO factory of the world in 2025 so far, because look at the number of IPOs, 78 main board IPOs in the year so far with $14 billion US dollars raised. India ranks only behind US, China and Hong Kong in terms of fundraise. And what's interesting is this is despite FIIs pulling out a whole $18 billion in the year gone by, and this data is from Bernstein. If you take a look at the monthly breakup of all the 78 IPOs, the most number seen in 17 seen in September. October so far we have 13 IPOs, 6 in Jan, 4 in Feb, a slight of a lull in March and April, but that picked up once again in July, August, September. Good numbers in terms of IPOs seen over there. This also from Bernstein. Now from our ET Now internal research, this is the data that we've collated. Top listing day gains in 2025, some important IPOs. Highway Infra saw a 73% listing gain, good premium over there. Aditya Infotech followed with 60%, Quadrant Future Tech with 53, LG Electronics India IPO, the most talked about IPO this year along with Tata Capital. So LG saw 50% listing day premium, and GNG Electronics and Stalin India both saw 40% each. Now, most subscribed IPOs of 2025, the demand for the primary market has been robust. Highway Infra saw 300 times subscription, followed by Indofarm Equipment at 230 times subscription, Denta Water, Stalin India, Quadrant Future Tech, Standard Glass Lining, GNG Electronics, and Urban Company also. Urban Company saw 104 times subscription to its IPO offering. Lastly, in terms of IPOs with the highest bid values in 2025, subscription data was robust, but as was the case with the bid values for the IPI, LG Electronics India leads from the front with a big amount, 4.4 lakh crores, and in second place you have HDB Financial at 1.6 lakh crores, so that gap is quite significant, followed by NSDL 1.15 lakh crores, Indofarm Equipment, Denta Water, Quadrant Tech, Stalin India anywhere between 26 and 40,000 crores, Tata Capital 21,200 crores, and Hexaware Tech at almost 17,200 crore rupees. All of this data collated by ET Now Research, but well, yes, this only goes ahead and indicates the kind of robust moves we've seen in the IPO market in 2025.
You know, while IPOs have created millionaires in New India, let's also take a look at how India's wealthiest fared in the last 1 year, Ankita. Now, some gained billions, of course, while others were not so lucky this time. Let's start with the gainers. Now, the biggest jump came for Gautam Adani, whose wealth surged by $12.4 billion in just 2025. Taking his net worth to over $91 billion. That's a strong comeback after last year's volatility. Next up, there is Lakshmi Mittal, saw his fortune rise $8.3 billion thanks to global metals rally. Now that's a whopping 42% for him. Mukesh Ambani, India's richest man, he added $7.2 billion with his wealth now nearing $98 billion. That's driven by strong telecom and retail performance for Reliance Industries. Now Sunil Mittal, he has also seen a stellar year, up $4.8 billion. That's supported by Bharti Airtel's expanding digital play. On the other hand, we also have Kumar Mangalam Birla, who has gained $3.2 billion, while Savitri Jindal, she added about just $1 billion to her fortune. So that's about the gainers, Ankita. But what about the losers? Who are the
Absolutely,
ones
Kanishka. Let's talk about the losers also. I mean, the list is long for the gainers, but let's talk about the losers then. And some of them saw some big declines there. Shiv Nadir's wealth dropped the most, down almost $7.6 billion as IT stocks came under pressure this year. We had Chapur Mistry and Dilip Sanghvi each losing almost $4 and $4.5 billion, while Azim Premji's net worth fell by $4.3 billion, also reflecting the slowdown in the IT sector.
Absolutely, Ankita. You know the story of 2025, metals, telecom and infrastructure billionaires, they gained, whereas tech tycoons, they took a hit this time. Now, the wealth leaderboard, that may be steady at the top, but fortunes have clearly shifted this somewhat. And as we head into Samvat 2082, India's wealth story continues to evolve with shifting sectoral tides.
Absolutely. And well, last but not the least, this Diwali couldn't have been better, all thanks to the Diwali dhamaka in the form of the GST rate rationalization. Well, the GST slabs have now come down to just 2, plus a special rate of 40% on select items and the sin goods. Well, as many as 375 items, including autos, FMCG, skincare, dairy products, medicines, staples, will now be cheaper, and the market is pinning its hope on the bumper Diwali consumption for this year.
Absolutely, Ankita. You know, now consumers are expected to save up to 2.5 lakh crore rupees given the GST rate rationalization. Home buyers, they're also getting relief as GST on cement has been reduced to just 18%. GST on small cars, that's also now just at 18%, whereas luxury cars, they will attract a flat 40% GST, which of course is still resulting in discounts compared with earlier rates. And finally, GST on life and health insurance, that has also been brought to zero, which is a long pending demand.
So, Kanishka, we've already talked about how tariffs that bit economies really hard and how Indian markets have failed to give significant returns this year. But Diwali is all about overcoming darkness with a firm resolve. And the new year holds promise, as analysts say that Indian markets may have bottomed out due to time-wise correction, but a lot hangs in the balance because of the global uncertainty. Well, the IMF now sees India's economy growing at 6.2% in 2026. That's a drop of 20 basis points.
Absolutely, Ankita. But if you know, there's a lot that will depend on how the war between China and US plays out in the coming year. Now, US has now threatened new 100% tariffs on China, while India's neighbor has issued stringent curbs on rare earth metals. Now, the war between Israel and Hamas, that has almost ended, but Russia, that refuses to relent in Ukraine. And now there is talk of US sending Tomahawk missiles to Ukraine. Now, the world feels like a tinderbox at the moment, but history tells us that volatility also presents opportunity. And it's time that India grabbed it with both hands.
Well, absolutely, Kanishka. Here's hoping for a better 2026, at least for the Indian markets. But with that, it's a wrap on this very special edition of the Ultimate Snakes and Ladders. Kanishka and I will take your leave, but here's wishing all our viewers a very happy and a prosperous Diwali.
Absolutely. Very happy Diwali to all of you.
Hello and a warm welcome. You've joined us on ET Now. I'm Ashesha Advaryu, and one asset class that is shining bright this Samvat is the precious metals basket. Gold prices are up nearly 55% on a year-to-date basis. Silver too is shining bright. That one is up 70% over the corresponding period. But is the surge in gold and silver prices denting demand? To understand that, we are now joining you from Kisna Diamond and Gold Jewelry Store here in Mumbai, and we are in conversation with Mr. Parag Shah, Director and Chief Executive Officer at Kisna Diamond and Gold Jewelry. Mr. Shah, thank you so much for taking your time out and joining us here on ET Now. So the first question and the most important question, is the surge in gold prices impacting demand?
If you say yes, if you say no, because as we have been approaching in pan-India, the Kisna is into pan-India, so there are some of the regions we have been getting a little bit of dent, but most of the areas, I can say tier 2, tier 3 cities, towns, they are doing very good. They are very highly aspirational for this new price coming up. They have taken this as a different note altogether.
So are customers waiting in anticipation of fall in prices? Is that the expectation of the broader community at large?
It seems back, but now it's a FOMO, you know, because fear of missing out.
Right.
As people thought that gold is going way higher, let's say it started from 85,000, it went to 90, people thought it may come back again 92, let's say 100,000,
Right.
1 lakh. people again thought, but now people are looking at this that it's not going to wait. So people has already started accepting this. It's a new norm, you can say.
Right.
Like what happened in COVID, initially people didn't expect it, but now they are been pretty sure that this is a good time to buy a jewelry.
And what is your expectation? Do you expect gold prices to surge?
As per my expectation, yes, because if you see the geopolitical affairs going around each and everywhere, and as people are not much confidence with the US economy, they are switching it. So there are multiple newses, multiple rumors coming at that major of the countries are buying the gold. And again, if you come back to India, when it's India, it's again very young seed country and followed by a festive season. So we see that it's going to get stable somewhere around here or may still go up a little bit, but it's not going to go down.
So what are consumers doing? Are they buying ahead of the wedding and festive season? Are they switching? Are we seeing change in consumer trends? Are they buying diamond because gold has become expensive?
See, there's always change in the trend, you know. That's always been taught to us in Gita. Ki Parivartani Kudrat ka niyam hai is the same thing. You know, people are changing and it has to change. That's how, you know, it's a crux of the business. So if you say now the light jewelry is been into complete trend, they are again switching into the new type of designs which are very trendy and multiple occasion, because you know it was a time when people used to buy a jewelry for each and every occasion, but they want the jewelry for the multiple occasion. Again, if you see, they have been converting into diamonds because diamond currently is stable, and there are the new metal coming. As if you see the silver, as you rightly said, even platinum, people are also looking for a little bit of platinum because still compared to the gold, it's still stable. So the trend, changing trend is purely into designing, and still India has been rooted country, so still little bit of contemporary because they need to wear this jewelry into different occasions, you know. And ek baat to hai, they want to wear in the wedding.
Right.
So that's the new trend coming up.
But then is the surge in demand for wearable jewelry, light jewelry real? Are people consuming lighter jewelry as compared to wedding jewelry?
Yes, obviously. The light jewelry is into new trend, and because there's shift into the consumer as well. You see the new young consumer are the new consumers now. And if you see even their weight and height, they're very pretty delicate, you can say. So the delicate jewelry suits, and again comparing to the price, this is very good for them that they buy this kind of lightweight jewelry. And again, they're very choosy. They keep on changing the styles. So at my place, we have a wonderful 90% of exchange and 95% exchange and 90% buyback. So that's what this new consumer are looking into it.
Right. And what about silver then? Are we seeing demand for silver as well?
Silver, I cannot comment much into silver because silver has seen a very complete different direction it's moving on. Nobody thought of it at this price. It's going so high, and still there is no way that we can see that price is going to get stable. And again, there's always a rumor coming around. Now people are looking at silver at 350 different price. I am nowhere to compare on silver prices, but definitely silver is new in because people thought way back that as gold has surged, because gold started surging first. So people thought they will move into a silver jewelry, but again it has started more faster. So let's wait for it.
So are people buying gold bars for investment? Is that the trend that you're seeing because of the kind of surge that we have seen so far?
See, Indian consumers are always very smart. Definitely they are buying bars. The bars are selling much, but they also are buying jewelry because see, it's a new way of investment again coming up. It was always an investment, but now it's a smart investment, you can say, compared to the other instrumental where the yield is very different. But gold, which has given a yield since last 2 years, is tremendous. So people are thinking, let's buy it. लेते हैं, पहनेंगे भी और use भी करेंगे और investment भी बढ़ेगा. That's what the people are thinking today. So they are buying definitely. That's
and are people actually coming to sell gold to probably capitalize on the surge in prices?
So that's always a market, you know. There's always buy and sell happening in the market. So there are people who wants to sell their old gold. They are coming up. It was seen last week, but I can see there is little bit slowdown in last couple of weeks. People has slowed down of doing that old gold back. It was there last few months before the year. I can see it was a huge way, but now again it has been slowed down because again maybe the anticipation of the people consumer that is going to go high. So they are waiting for us.
And how is the preparation for Dhanteras?
Dhanteras pretty good for us because we are able to book many orders for the Dhanteras. People had already come here, chosen, paid in advance. They're going to come back on Dhanteras. They're going to have that because it's the most auspicious occasion in India, and people think that they should have at least a small piece of gold or jewelry on that day, and that's purely a traditional over the years. So they want to maintain that. So we have got a substantial amount of booking and hoping to have a big sale on that day.